Welcome to the Wilber and Longenbaugh podcast, where we break down tax, accounting, and financial strategies to help businesses stay compliant, profitable, and prepared.
It is really great to be back for another deep dive today.
Yeah, we are tackling a subject that is honestly on the mind of pretty much every business owner we talk to.
The constant battle against the clock.
The clock and the wallet.
Right, exactly.
We are looking at this entire issue through the lens of technology today, specifically accounting tools.
And there are plenty of them out there to choose from.
Oh, I mean, we are living in the golden age of there is an app for that,
Right.
You open your laptop and there are just a million software platforms promising to completely change your life.
Double your revenue.
Right.
Get you coffee in the morning.
Exactly. But here is the problem, and I think a lot of our listeners will relate to this. Not all of them actually create value.
No, they don't.
Some of them just seem to create noise.
That is a very real problem.
Yeah.
In the industry, we actually call it shiny object syndrome.
Oh.
You see a tool because the marketing looks sleek, maybe a competitor's using it, and you sign up. But then 6 months later, it is just another recurring charge on your credit card.
A charge you completely forgot about.
Right. You haven't logged in. Or worse, in many cases, it actually adds complexity to your workflow rather than simplifying it. You end up managing the tool rather than the tool managing your business.
That is the absolute worst case scenario. Instead of saving an hour, you spend 2 hours trying to figure out how to reset your password or integrate it with your email.
It defeats the whole purpose.
So our mission for this deep dive is pretty specific. We really want to cut through all that marketing fluff. We want to figure out what separates a genuinely helpful accounting tool from one that is just digital clutter.
We want to move from just using software because everyone else is to what you might call strategic implementation.
Precisely. It is about moving from data entry to actual strategy. The goal isn't just to have the software, it's to build a system that thinks for you.
So let's unpack that idea of a system that thinks. When you look at the landscape of accounting tools, which is vast, as we just said, what is the core function you should actually be looking for?
What makes a tool a good tool versus just a waste of money?
It really comes down to 3 specific non-negotiables. If a tool doesn't do these 3 things, you probably do not need it.
Okay, lay them out for us.
First, it must aggressively reduce manual work. I don't mean it helps you type faster. I mean it stops you from typing entirely.
Right.
Second, it has to improve accuracy because humans are notoriously bad at repetitive data entry.
We get tired. We make mistakes.
Exactly. And third, and this is the big one people miss, it needs to provide better visibility into your numbers.
Okay, reducing manual work seems obvious. We all want to do less typing. But that visibility piece, that sounds a bit like a buzzword. What does visibility actually mean in a practical day-to-day sense for a business owner?
Think about it this way. It is the difference between data and information. You can have a shoebox full of receipts. That is collected data. It is a complete record of what you spent. But it is entirely useless for making decisions.
Right. You can't just stare at a shoebox and know if your margins are slipping.
Exactly.
Yeah.
A good tool organizes that data so you can actually use it to make smarter choices. It turns the what into the so what.
The shoebox method is a classic, but yeah, very hard to build a strategy around a pile of fading thermal paper.
Very hard.
But here's where I get a little skeptical. We see businesses buy the right tools. Maybe they even subscribe to the top-tier software, but they still struggle. Why is that? If the tool provides visibility, why are they still flying blind?
We call that the implementation gap.
Mhm.
It is an incredibly common pitfall. You can buy the most powerful power drill in the hardware store,
Right.
but if you don't know how to use it.
Or if you use it to try and hammer in a nail.
Yes, exactly. You are just going to damage the wall. We see businesses utilizing powerful tools incorrectly all the time, or simply failing to turn on the features that actually save time. They basically treat a Ferrari like a go-kart.
So the key takeaway there is that success isn't about the purchase. It is not about buying the software license. It is about the system and the structure you build behind it.
Correct. Tools are meant to enhance the accounting process. They are not meant to replace human oversight or strategy. They are force multipliers, not magic wands.
I love that distinction, force multipliers. So let's get into the mechanics of this. If we are building this house of financial stability, what is the foundation? Where do you start?
The absolute starting point for most modern businesses has to be cloud-based accounting platforms.
Okay.
And to be specific, in our firm, we look at QuickBooks Online as a prime example of this foundation.
The cloud. It is a term we have heard for over a decade now, but let's talk about why it actually matters for a small business owner versus the old way. I know some people who still swear by their desktop version because they feel safer having the file right there on their hard drive.
I still see that too.
What is the tangible advantage over the old desktop version, or heaven forbid, just a giant spreadsheet?
The biggest advantage is killing the latency. In the old days, the desktop model accounting was just history. Your accountant might come in once a quarter, or you might send a backup file on a thumb drive once a year.
Right.
That means you were just looking at the past. You're basically performing an autopsy on the year that just died to figure out what happened.
That is a grim image, but I guess it is accurate. You are finding out you lost money 3 months after the fact.
Exactly. With cloud systems, you have real-time access to financial data. We can log in simultaneously with the client. If they have a cash flow crunch on a Tuesday, we can see it on Tuesday.
You aren't waiting for the quarterly report to be printed out.
Right. And crucial to our work, it allows for real collaboration between the business owner and the CPA.
That collaboration piece is huge. It changes the whole relationship from here's my shoebox in April to let's look at this together in July and make a plan.
It shifts the entire perspective. Instead of reacting retroactively, you are monitoring activity monthly. You can adjust strategies throughout the year rather than just hoping for the best.
Let's talk about the specific feature that drives this efficiency. You mentioned eliminating typing earlier. I assume you were talking about automated bank feeds.
Yes. Bank feeds are the absolute game changer. It eliminates hours, literally hours of manual typing.
Walk us through how that works for someone who might still be doing it the old way.
Instead of sitting down with a paper statement and typing in Office Depot $45 supplies, the bank feed pulls that data directly from the bank's server into the software. The software recognizes the vendor and suggests the categorization based on past behavior. You just click match or add.
But I imagine the expert in you loves it for a different reason than just speed.
I do. I love it for the accuracy. The real value lies in reducing human error. We call it the fat finger problem.
Yes.
The sack finger problem.
When you type things manually, you naturally transpose numbers. You take $54 instead of $45. You miss a decimal point. Automation significantly reduces those transcription errors. The number the bank sent is the exact number in your books, period.
So we have our foundation with the cloud. Now let's talk about the physical world, specifically receipts. Expense management. I feel like this is the bane of every single business owner's existence.
Oh, absolutely.
Everyone has a system, and everyone's system completely falls apart by March.
It is a major pain point. Manual receipt tracking and reconciliation are just massive time sinks. And it's not just the owner, it is the employees too. Losing receipts, fading ink, forgetting what a specific business lunch was actually for.
And from a tax perspective, this is a nightmare, right?
It is genuinely dangerous. If you cannot prove the expense, you technically cannot deduct it.
Yeah.
If the IRS audits you and asks what that $500 lunch was and you don't have the documentation, that deduction simply evaporates. Plus, you get hit with penalties.
So what is the solution here? How do you tame the paper beast using modern tools?
Modern tools allow for digital receipt capture using OCR, optical character recognition.
Okay.
You use an app, QuickBooks has it built in, or there are specialized tools like Dext. And you literally just snap a picture of the receipt with your smartphone.
So it is not just saving the photo as a dumb image file. It is actually reading it.
Correct. The AI scans the image. It identifies the vendor, the date, the total amount, and usually even breaks out the sales tax. It instantly categorizes it and syncs it directly with the accounting software we just talked about. It digitally staples the image to the transaction.
So no more spending your Sunday night taping little bits of thermal paper to a printer sheet for the accountant.
Thankfully, those days are ending. And the benefits go way beyond just getting your Sunday night back. It reduces reimbursement delays for your employees, which keeps morale high.
Sure.
But more importantly for the business, it creates a bulletproof audit trail. If the IRS ever asks, what was this expense? You have the digital image linked right to the transaction. You aren't digging through a dusty basement file cabinet.
That peace of mind is worth the subscription price alone. Now moving to another high-stress area, payroll. This feels like an area where you really do not want to mess up.
The stakes in payroll are incredibly high. The government does not have a sense of humor about payroll taxes.
I can imagine.
Payroll mistakes are expensive. And honestly, compliance errors usually stem from simple manual miscalculations or just missing a filing deadline because you were busy running your actual business.
So automation here is essentially a safety net.
It is. Payroll systems today, things like Gusto, QuickBooks Payroll, ADP, they automate the tax withholdings, they handle the direct deposits, and they automate the reporting requirements. They file those quarterly forms that state and federal governments require automatically. This prevents penalties, which can be severe.
However, and here's where it gets really interesting. I know you have a warning about this. Can you really just set it and forget it? Can I just let the software run and assume everything is perfectly fine?
That is the danger zone. I always tell clients that automation reduces risk, but it does not eliminate responsibility. You cannot just blindly trust the machine forever.
Why not, though? If the computer's doing the math, where does the error actually come from?
The error comes from the inputs. The software only knows what you tell it. If an employee moves to a different state, you have to update the system, or you are withholding the wrong state tax.
Ah, I see.
If you change your health insurance plan, you have to update the deductions. The tool does all the heavy lifting of the calculation, but you, or your advisor, must still be the pilot checking the coordinates.
That is such a crucial distinction. It reduces execution risk, but not management risk.
That is a perfect analogy.
Okay, so we have the foundation, we have teamed expenses and payroll. Now we have all this great data flowing into the system. The problem is a lot of business owners look at their accounting software and just see a massive wall of numbers. They do not know what they're actually seeing.
So this brings us back to the so what factor. We have the data, so what does it mean? This is where dashboards and visualizing financial health come into play.
Dashboards. It sounds like the cockpit of a plane. What are we actually looking at here? Is it just about making the data look pretty?
It is not about aesthetics at all. It is about pattern recognition. The human brain processes visuals much faster than raw numbers on a spreadsheet. A dashboard gives you charts and graphs showing revenue trends, expense breakdowns, cash flow, and profitability. These tools help owners spot patterns early.
Can you give us a concrete example of a pattern that a dashboard might reveal that a standard spreadsheet might hide?
Sure. Let's talk about the difference between leading and lagging indicators. A profit and loss statement is a lagging indicator. It tells you what happened last month. But a dashboard can track something like accounts receivable days. That is how long it takes your customers to actually pay you.
And why does that specific metric matter so much?
Because if you see that number creeping up, say it goes from 30 days to 45 days over a couple of months, that is a leading indicator. It tells you that you are about to have a severe cash flow problem, even if your profit looks fantastic on paper.
Oh, that is huge. So you see the storm clouds gathering before the rain actually hits.
Exactly. If you see that visual trend line spiking up on your dashboard, you can start chasing down invoices today. If you wait until your bank account is empty, it is already too late. That is the shift from bookkeeping to true advisory.
That actually explains why some seemingly profitable businesses go bankrupt. They have profit on paper, but literally no cash in the bank to pay the electric bill.
We say it all the time. Profit is an opinion, cash is a fact. You need tools that show you both, and doing it visually is simply the best way to digest that information quickly.
I really love that. Now I want to address something that drives people absolutely crazy. You have a payroll system, an invoicing system, maybe a point-of-sale system in the store, and none of them talk to each other. You are entering the exact same sales number in 3 different places.
Yes. The disconnected silo problem. We affectionately call it the swivel chair interface.
The swivel chair interface.
You look at one screen, write a number down on a sticky note, swivel your chair around, and type it into another screen.
I have absolutely done that. It is completely soul-crushing work.
It is incredibly inefficient, and it practically invites error. Every single time you manually move a number from one system to another, you risk making a mistake. The goal you want to achieve is the ecosystem, the fully integrated solution.
Explain the data flow in that ideal world. Walk me through a single transaction.
In a fully integrated ecosystem, let's say a customer buys something on your website, maybe through Shopify. Shopify takes the money and instantly tells your inventory software to deduct 1 unit.
Okay.
It simultaneously tells QuickBooks to record $100 in revenue and $5 in sales tax. Then, the payment processor deposits the cash in your bank, and the bank feed we talked about earlier matches that deposit to the original Shopify record automatically.
And a human being touched that process how many times?
0 times. The data flows horizontally across the entire tech stack without any human intervention. This drastically reduces manual entry and improves accuracy across the board.
That sounds like absolute nirvana for a business owner. But is it hard to set up? I feel like integration is one of those scary words that implies hiring an incredibly expensive IT consultant.
It used to be. Now, with modern APIs, it is usually just a matter of click and connect. But, and here's the major caveat, if you connect garbage to garbage, you just get a larger landfill. You need to map it correctly from day one.
What do you mean by mapping it?
You need to tell the system the rules. When Shopify says shipping income, you have to map that to revenue in QuickBooks, not expense. If you map it wrong, you can destroy your books in a matter of seconds, and it will do it automatically every single time a sale happens.
So we are right back to that core theme from the beginning. The tool is powerful, but the setup is highly specialized. You need an architect.
Exactly right. You don't just start nailing boards together hoping a house appears. You need a blueprint and a plan.
And this brings us back to the ultimate result of all of this. If the computers are finally talking to each other, what is the business owner actually doing with their day?
They are exercising strategic freedom. That is the ultimate goal here. When an owner spends less time chasing paperwork, fixing transcription errors, or trying to figure out why column A doesn't match column B, they finally have time.
Time to actually run the business.
Time to focus on growth, time to focus on client service, time to focus on long-term strategy and building value.
It sounds like freedom. It sounds like getting back to the actual reason they started the business in the first place. Nobody starts a business because they have a burning passion for entering data into spreadsheets on a Friday night.
I certainly haven't met one yet. They start a business to solve a problem or provide a service. The accounting should support that mission, not hinder it.
This has been a really fantastic overview. I think we have successfully unpacked the real difference between just having apps and having a strategy. As we wrap up this deep dive, let's distill this down. If our listeners take away just 3 main principles from this discussion today, what should they be?
First, prioritize visibility over convenience. When you are evaluating tools, choose ones that actually improve visibility and accuracy, not just ones that have a pretty app interface. It is not just about what is easy to click. It is about what tells you the truth about your business.
Right. Do not mistake a sleek interface for a robust system.
Second, trust but verify. Automation saves massive amounts of time, but setup and oversight are absolutely essential. Do not abdicate your responsibility to the software. You need an expert to help set it up, and you need to keep a close eye on the controls.
The pilot is still in charge of the plane.
Always. And third, integration is king. Integrated systems reduce duplication, strengthen compliance, and support proactive tax planning. Get your systems talking to each other. Stop working in disconnected silos.
That is a really powerful summary. I think the big philosophical takeaway here is that accounting tools shouldn't just be about digitizing your bookkeeping. Taking a broken paper process and making it electronic doesn't fix it. It should be about strengthening the entire financial foundation and providing that year-round clarity.
Absolutely.
Well, yeah.
It is about being prepared for whatever comes next, not just staying compliant with the tax code.
Now, before we officially close out, I want to leave everyone with a final thought to chew on. We talked a lot about tools giving you real-time visibility today, but think about where this is heading next. As these integrated systems get infused with advanced AI, the next frontier isn't just seeing your data in real time. It is predictive accounting.
Oh, definitely.
Your software won't just tell you that your cash flow is currently tight. It will predict a cash crunch 3 months from now and automatically suggest which specific expenses to cut today to avoid it. So the question for you to mull over is this. Is the financial foundation you are building right now clean enough and integrated enough to handle that kind of predictive intelligence tomorrow? Because if your data is still a mess, the AI won't be able to save you.
That is a very sobering but exciting thought.
It really is. It is time to stop letting the tools run us and start making the tools work for the business. Thanks for joining us today on the Wilber and Longenbaugh podcast. We will continue helping businesses stay compliant, profitable, and prepared through practical financial strategies and advisory insights.
And if you want to explore how these tools can work for your specific situation, or if you need an architect to help build your financial ecosystem, we would love to help guide you.
Definitely. Encourage you all to learn more about tax, accounting, advisory, and bookkeeping services by visiting https://mwwcpa.com. Until next time, keep your numbers straight and your strategy sharp.